What is good, everyone? So in today's video, I'll be going over my simple but boring scalping strategy that makes me over $3,000, $4,000, $5,000 every single day. And now in the end of the video, I'll also be going over live trading examples and verifiable proof of literally everything. So it's not going to be no fake demo guru in Dubai or Miami or whatever flexing lifestyle videos. No, it's going to be an educational video where you literally can steal my strategy for free and literally just copy it and make a few $1,000s a day yourself. So without making the intro too long, let's just cut straight into it. So before we get into the verifiable proof of how much I make and basically everything in between, you first have to understand the setup and then the entry types after. So the setup itself and then how you can actually enter, because there's 4 ways you can enter this position. So the whole setup is up here, right? This is one setup, just one setup. It's called the Breakout plus liquidity grab, where it essentially is just a breakout of this range. Let's say that this level right here, right, this is a resistance level or a support in a bearish trend, right? We essentially break out and then the next candle actually pushes down, breaks its previous lows, right, and then makes a liquidity grab, and then we continue bullish. So it stops out everyone that enters early. Now you can see right here in this example as well, it is essentially the same thing. We break out, we respect this resistance right here, and then we make a liquidity grab to the downside, and then we continue bullish. And in the bearish trend, obviously we break out to the downside. Let's say that this is a support level. We break out of that support level, then we push up in the next candle, break its previous highs, and then we can continue down. And now it's the same thing here. We break out, then liquidity grab, and then continue down. But the entire purpose of this breakout plus liquidity grab setup and strategy essentially is that we take advantage of people entering early. So there's retail traders and institutions that actually end up entering positions right here and have their stops below previous lows and then try and continue bullish in this example right here. But what happens, right? We shoot directly down, liquidate them, manipulate them, stop hunt them, and then we move. And the same thing right here, right? People end up entering right there, stop loss below the previous lows. And whenever there's stop losses below previous lows and above previous highs, that also equals there's liquidity there, right? There's resting liquidity, and resting liquidity equals money. Obviously, price wants to hunt this money before it's going to continue bullish or bearish. So in this case, retail traders and everyone else that isn't watching this video, obviously, that isn't using this strategy, they basically end up entering early. So they end up entering right here, and then price immediately goes to their stop loss because they have their stop loss below previous lows. That makes a liquidity grab, and then we can continue post liquidity grab. So instead of entering early after you've watched this video, you can actually end up entering after the liquidity grab and then taking advantage of everyone getting stopped out. And that's why this strategy has such a good win rate, because it has a win rate of about 80 to 82% with an average risk to reward of 1-to-1. So it's the same idea on the bearish side, where people end up, retail traders end up entering early right here, stop loss above previous highs because their stop losses above and below previous highs and lows, and there's resting liquidity up there. And what happens, right? We instantly shoot up to the stop loss. And I know you've tried this before. You've probably end up entering a position and then price immediately goes to a stop loss. But then after going to a stop loss, it actually continues in the direction you were anticipating. And that's exactly what happens right here. And that's what happens every single day in the markets. So we can literally just take advantage of this and make a lot of money. Now we push up, liquidate previous highs, making this a liquidity grab, and then we can continue bearish. Same idea right here. Instead of entering here, you actually wait for liquidity grab, liquidating everyone, stopping out everyone and manipulating everyone, and then you end up entering post liquidity grab and then riding the wave down. But that's the setup explained. Now you can end up entering the position in 4 ways right here. So there's candle closures. I'll go over all of them, by the way. There's a candle closure, then we'll go over break current higher low, break previous higher low, or inverse fair value gap. And before we get into the entry types, the best thing about this strategy is that it's all mechanical. You can literally just copy it on a piece of paper, write it down, and then implement it into your own trading strategy. And then you know exactly what you're looking for. It's not random. You're not looking for different things every single day. It's literally just a fixed strategy that prints money over and over again. So the first entry type is called candle closure, which is pretty self-explanatory. You end up entering on a candle closure whenever the candle closes, right? So if this is a 1-minute candle closure, 5-minute, 15-minute, 30-minute, 1 hour, it really doesn't matter, because price is fractal. So this means that on the 1 minute, it's going to print the exact same price action as on the 30-minute, because it follows each other. Every single time frame tells a story and it aligns with each other. So it doesn't matter if it's on the 1 minute, 5-minute, 15-minute, 30-minute, but I'll show you guys some live trading examples later where you can literally see me using every single entry type so you can actually get a better understanding of it. But you end up entering on the candle closure, and then you basically put the stop loss below or some kind of internal lower structure, and you can basically ride the wave going bullish. So again, you follow the higher time frame trend. In this case, it's bullish, right? And then you wait for liquidity grab to the downside, and then the entry type here is the candle closure. Now, the second entry type is a break current high or break current low. And what do I mean by this? So whenever a candle obviously opens up, it either pushes down if it wants to grab liquidity and then starts rejecting and continuing bullish. Imagine this was blue right here, right? But whenever we push down, there's a wick on the top most of the time, right? If there's not a wick, it's still called a break current high because then this is just the high of the candle right now. But let's imagine there is a wick right there, right? So we push down, break these lows, and then whenever we start flipping bullish again and actually breaking these highs, so it's current candle high, right? We end up entering a buy position to continue bullish, right? So whenever we break its current high, it actually goes from bearish to bullish. So the candle opens up, right? Let me actually draw the candle here. It candle opens up, pushes down, breaks these lows, and then starts flipping bullish and breaking its own high again. So the candle is going to look something like this, right? So your entry in this case would be right here on the break of the current high. Now, it's a bit hard to explain this because you can't really see it in real time because I'm drawing the candles, but I'll show you guys some trade examples of it. But this is essentially the entry type here: break current high or low, and then we continue bullish. So obviously it's a break current low if it's in a bearish trend and break current high if it's in a bullish trend. Now that leads us to the third entry type, which is break previous high or low. So the first two examples were actually bullish examples where we follow the higher time frame bullish trend and we end up taking buys because the trend is your friend and it's always easier to follow the trend instead of trying to catch a reversal. If you're trying to catch a reversal, your win rate would go down, you'll win less trades, and you'll overall be less profitable. That's just the honest truth. But if you follow the trend, however, and basically ride the wave, you will up your win rate, you'll win more trades, and you'll make more profits. But in terms of the third entry type, which is break previous high or low, this is where you end up entering once it breaks. In this case, it's a bearish example. Once it breaks its previous low. So again, another impulse entry, but you end up entering the trade while the candle is still open. So whenever the candle opens up, it's obviously going to push up and break its previous highs. And then if we see a rejection here, it will most likely flip bearish. And once it flips bearish, you end up taking a sell stop. You place a sell stop, not a market execution, not a sell limit, but a sell stop below the previous low. So we push up first, and then we start flipping bearish like this. Now, all of a sudden, there's a liquidity grab to the upside, and your entry is on the break of the previous low exactly right here. So this is your entry, right? You put your stop loss up here and you target the nearest lows. So now we've got a candle closure, which is essentially just a candle closure, right? Break current high or low is whenever we break its current candle's high or low, right? And then break previous lows is when we break the previous low in a bearish example and break its previous highs in a bullish example. But again, all of these three entry types right here all follow the same criteria of the setup, which is a breakout plus liquidity grab. Breakout, right? Liquidity grab, breakout, liquidity grab, breakout, liquidity grab, and then continue. Now that leads us to the fourth entry type, which is the inverse fair value gap. Now this will get a bit more advanced, so hang on and hang tight. But if you don't know what an inverse fair value gap or a fair value gap is, a fair value gap is simply a 3 candlestick pattern where you can see the 3 bullish candles right here. You take the first candle's high, right, and match it with the third candle's low. So in this case, there's a fair value gap here, bullish fair value gap, right? There's a gap in here, or there's an imbalance, whatever you want to call it. However, once we inverse it, that means we can enter. Okay, so once we inverse it and actually close below with the body closure here, right, that means we've inversed this fair value gap and it's called an inverse fair value gap. And now we can simply ride the wave going down, right? So in this case, this is your entry. Stop loss will be up here, and you can target these lows down here. And now this is more advanced because you may not be able to see it, but this is actually also a liquidity grab. So we've got a liquidity grab right here. We got a liquidity grab right here, 2 bullish examples, and we have one right here in a bearish example, but this one is also a liquidity grab. And funny enough, this setup right here is actually the exact same setup as this, just on the lower time frame. So this, let's say, is the 30-minute. And let's say that this is the 5-minute, right? So this candle right here and this push up right here is actually market structure on the lower time frames. So yes, this isn't a wick. It's technically not a liquidity grab, but it still is because we broke previous highs and we closed bullish, but actually instantly started rejecting it. So on the lower time frames, these 2 candle closures are actually a wick on the higher time frame. And then what happens after we basically make a liquidity grab following the higher time frame trend? Well, we will most likely 82% of the time continue down, or in this case follow the higher time frame direction, which in these two examples right here is bearish and these two examples are bullish. Now that is the whole setup: breakout plus liquidity grab, and the 4 entry types: candle closure, break current, break previous, and inverse value gap. So let's go over some trade recaps first, and then I'll go over some live trading examples where you can see me making $3,000, $4,000, $5,000 with verifiable proof. So if you don't understand these quite yet, you can rewatch it or watch it after you watch until the end, and it will make sense. All right, so now we'll go over some live trading examples of me using this breakout plus liquidity grab strategy, and you can basically see the entry types here. Okay, so first of all, you got to understand that this strategy works in all sessions, on all pairs, on all time frames. It doesn't matter if you're trading futures or forex, doesn't matter which pair you're trading, doesn't matter which session you're trading. Obviously, New York is better than London, and London is better than Asia in terms of volatility, but it doesn't really matter which time frame you end up entering as well, because price is fractal. So what prints on the 1 minute is also going to print on the 30 minute. Okay, so now we've got that out of the way. Let's go over the trade example here. This is my mentorship group, by the way. This is not the group. This is like the video modules where I record all the live trading videos, etc. And I trade live with them. But let's go over here, right? So this entry type is a candle closure. So we end up entering the, obviously it's a setup, which is called the breakout plus liquidity grab. I'll show you guys here in just a second. Right, you guys can see it right here. Right, we break out of this range in a bullish trend, and then we grab liquidity on this 5-minute candle in this case, right? Grab liquidity on the 5-minute by breaking previous lows, also respecting this level, and then we can continue bullish. So this entry is on the 5-minute closure, so candle closure, and let's basically just play price here. Looks pretty nice now, can't lie. I'm gonna have entries here, okay, boys? I'm gonna have entries here. So I end up entering
order filled
right there, right on the 5-minute closure, and now there's a liquidity grab to the downside, and there's an 80 to 85% chance that we will continue bullish. After some minutes, we shoot up, and it's a pretty beautiful trade. So I won't break even once we tap these highs, right? And we basically just continue bullish, right? So let's actually, basically mute this, and let's play this video forward, right? So you can see right here, and we just push up. And I think I made like, let me see how much I made this, because obviously verifiable proof, $700 on my live funded accounts, 700 times 5 accounts, because this is copy traded on 5 accounts, 7 times 5, that's $3,500, right? Isn't it? I think it is, yeah. So yeah, $3,500, pretty nice entry, pretty nice trade, can't lie. But the whole setup again, it's a breakout plus liquidity grab. You can also see it on the 1 hour right here. We broke previous lows, and then we can continue. Okay, so on the, let's see here, 2 minute, right? You can't really see it, but we also broke previous lows down here, and then here again. And I mean, it's just beautiful. It really is just beautiful. And then we end up entering on the 5-minute candle closures, and we basically made $3,500. Everyone took this inside my mentorship group. But let me show you guys another live trading example. So we've got another one right here where it's essentially the same thing. Let me actually unmute this. Now let's see here. I can't really remember this trade. I think end up taking a trade here, don't I? Yeah. So this is again. This is kind of an inverse value gap candle closure kind of entry. You'll see, but the setup is obviously the same. It's a breakout plus liquidity grab. You can already see the liquidity grab down here, and then I'm basically waiting for a breakout after that. Okay, so you can see right here, 20 seconds.
I am aware that we have news here,
end up,
I do believe
entering
that we want to continue up here. This news is going to do this, and then move, maybe, but like how can I, how can I anticipate that? Okay, log in here. We've got 5 seconds until closure. We close here. Okay, so 3, 2, 1, now.
Order filled.
So I end up entering the buy position right there, and you can basically see. Let's see if I zoom out here, so you guys can see the setup. Let's see. Do I zoom out? Because it looks pretty clean on the 30-minute. I can already anticipate. Look at this, bro. Look at this, boys. Right. So this is the position I'm taking. Did I take an NQ? Oh, I take an NQ, but you can see on YM as well, like this. Okay, this is NQ right here, right? Breakout, liquid grab. Now we can continue bullish. Now this is a candle closure, but entry type, but it's the same thing as a break current essentially right here. You can see the break current high right here. It would have been like a 3-point difference, but it's essentially the same thing. And then we target previous highs up here because there's also resting liquidity up there, and we basically anticipate that price will move bullish. So what price did in the beginning was push down, grab this liquidity, and then now we are pushing bullish and we're doing something like this, right? Liquidity grabs to the downside, we can continue bullish. Pretty easy and pretty straightforward, right? Went break even at the previous internal highs up there. Let's actually mute myself now. And basically we just wrote the trade up, right? So now you can see the play happening, and this is just beautiful price action. It's literally the breakout plus liquidity grab strategy and setup, and then we just entered on the inverse value gap and candle closure, basically break current high as well, right? And you can see right here also have verifiable proof. Let me just go to the end whenever I take profits here. Let's see here how much I made. I made about $900 across 5 accounts, so that's like $4,500. You can see the live account here. You can see the fund accounts, a leader 5. This means that it gets trade copied to 4 other accounts, you know, including this one or excluding this one. So this one and then 4 other accounts, which are also live fund accounts. And then, I mean, it's really just beautiful. Like, look at this, right? Breakout plus liquidity grab, continue bullish. So now let's go over the last one right here. I think I took a trade on this session as well. Let me see. Let's fast forward price here, this video here. And yeah, this looks clean off the bat as well. Like, this is probably going to be a candle closure as well. Wait, if let's play the video here. Way down here, no entries. 5 seconds though. It's gonna look like entries though here. Yeah, 3, 2, 1. I'm in right
Order
here,
filled.
boys. So I end up entering a buy position right there because this is a liquidity grab, and this is on the 5-minute as well. Now, if you zoom out to the 30-minute, let me show you guys. I do think I zoom out. You can see the 15-minute is pushing bullish after liquidity grab. I think I showed the 30-minute as well. Let's go to the 30-minute. Let's see if you can see the setup here. Do I zoom out here? Let me see. Wait, was that the 30-minute? Oh, that was the 15-minute, right? Do I show the 30-minute here? So 1 minute. So this is the 30-minute. Okay, it's different. It was 15 minutes still. You can see the idea, right? On the 30-minute, it would have looked cleaner, but you can see the breakout, liquidity grab, continuation, right? Targets or previous highs. You're entering on essentially to break previous highs, you could say, but also a candle closure. And you basically have stops not down here, but on internal lows, and you can ride the wave up. I think this is like a 1.15 or oh, look at this one. It's a beautiful trade. Like, it really is. We play price here and we basically just shoot up, right? Now break even, risk is off the table, and we let the trade run. How much did I make on this position? Let's see here. I made $1,140 times 5. That's like $5,500 or something. $5,600 on this position, and everyone caught it as well. Everyone's happy. Everyone making money, and you know, life is good. Now, if you've liked this video so far, please leave a like, comment, and subscribe. And if you want access to a free 16-page PDF file going over the entire breakout plus liquidity grab strategy with all the entry types right here, right? You can literally just join my free Discord. The link is in the description. And if you want one-on-one mentorship, you can also check the link in the description. And yeah, everything is tailored to you. Everything is tailored to your needs, your problems. And you can basically learn and earn while taking the same trades as me. Also live trading in there as well. Now, so if you like this video, please leave a like, comment, subscribe. And otherwise, I am out.